Okay, sounds good. So thank you everyone for joining us. Today's work webinar series, Financial Bootcamp for Small Business Owners. Today's speaker is Lorna Whitaker. Before we get started with our main presentation, just want to give you an overview of today's webinar and then just briefly speak about PACE. In terms of housekeeping, you're all on listening mode. We are going to have a Q&A session at the end. Because of the content and how it's very detailed, we are going to ask for you to hold your questions, but of course you can enter them as they come. Like if you have a question on one of the slides, go ahead and enter them. We'll try to address it all during the Q&A. We prefer the chat, but if you like, you can also enter it in the Q&A session at the very bottom there. The webinar is being recorded. It will be placed in our e-library. In addition, everyone who attended today's training will receive a copy, and also Lorna will provide me a copy of her slides to share with all the attendees. We also encourage you to complete the survey at the end of today's webinar. It gives us great feedback concerning our content, our programming, and then also provides feedback to our speakers. So with that, PACE, Business Development Center, has been established in 1993 to advocate for the wealth of communities by giving individuals the tools to develop sustainable business and manage their personal and business finance successfully. We do that through 3 core programs, which is technical assistance, one-on-one counseling, contract support, and lending. You're welcome to reach out to us if you're interested in any of our in-person training. Our most popular course is our entrepreneurial training program, which was going to start in January. I also included the flyer with today's information. And with that, I will hand it over to Lorna for our main presentation. And thank you, everyone. I will be off off video, but I'll be monitoring the chat and the Q&A. Thank you.
Great. Thank you, Veronica. Good morning, everyone. I'm really excited to be here with you today. I really love seeing so many of you attending. Some of you, I saw some names I did recognize. You were here on Tuesday, which is amazing because this builds on the work that we covered on Tuesday. So if you weren't able to attend Tuesday's presentation, please go ahead and grab that video out of the e-library and get a chance to review it, because these are building blocks. We kind of build on top of a solid foundation. So this is a 4-part series for money management skills. So what business owners and entrepreneurs need to have into their toolkit so that they can run healthy businesses today and enjoy sustainable success now and achieve true financial freedom tomorrow. I say this all the time. Success is not an event. It's a result. It's a result of the effort and the work that you do. So remember that if you're struggling with success, you want to check in with the number one person responsible, that is you. So let's get going here. All right. So today we're going to be covering the ABCs of financial statements. Like I said, it builds on the work that we did on Tuesday, but it has some of the same kind of slides so that I can make sure that you're all up to speed. Maybe less detail, but you'll be up to speed. So don't feel like, oh, I missed the last one and I'm not going to get as much out of this. You will get everything I promise out of this. So your numbers are your compass. Financial success is the destination. So I have to provide this disclaimer. I'm a small business consultant, a financial strategist, and a skills trainer. I'm an educator. I'm not an attorney. I'm not a CPA. I'm not a licensed tax professional. I cannot and do not give legal or tax advice. I provide information that's available to you if you were to go and look for it. But I put it all in one place so that it's right at your fingertips, usable, fast, easy, efficient. I empower others by sharing with them the proven techniques, strategies, and skills today's entrepreneurs must use to create businesses that are sustainable. We're not talking about old school stuff that doesn't work. We're talking about proven techniques and strategies that absolutely produce results when you use them. None of us was born knowing this stuff, okay? It's time business owners really have those financial and business skills necessary for creating profitable, well-run businesses. A well-run business is a pure joy. So a little bit about me. Okay. I've been doing this quite a while now. And it's my experience that savvy business owners make more money. Okay. And it's all learned. My purpose is to show others how to transform the way they manage their businesses when money management becomes easier, more efficient, and takes less time. We get back more time to do the things that we love to do. It takes more than ambition and hard work for us to achieve our goals. You need know-how. For the past 3 decades, I have been curating the very best, most effective strategies, insights, and tools that are essential for making and having money. I have worked for businesses that were successful, and I have worked for businesses that were on a path for failure. Okay. My clients succeed. So each of us must take responsibility to learn how things work. And I have an extraordinary gift for taking complex financial concepts and simplifying them into actionable skills. I learned in my second year of business how to triple my income. It was huge. I didn't know that my first year in business, and that was over 15 years ago. I just knew I could do better. So I said, how am I going to do that? And then I started applying strategical strategies to make sure it happened. I have helped my clients create financial stability and extraordinary growth. I've had 2 clients go from being local startups to international contenders. I have led more than 600 in-person and online workshops since 2008 and estimate that I have trained over 1,500 entrepreneurs. I share this with you so that you know that I have the expertise to deliver this content in a way that you can apply and use. My intention is to inspire you to make money management a natural part of your everyday life, to empower you with the tools and skills that make it simple and effective, and to guide you on your journey toward building a thriving business and a comfortable financial future. So today we're going to cover a few basics for you. One of these things is the laws of profitability. This is a fundamental element and one that has become more refined over the years. People thought it was always hard work. It's more than that. There are nuances to it. The laws of profitability I'm going to give to you, okay? Terminology to help you navigate your world. And so we're going to start with that too. And then we have financial reports, how to read them, how to use them, why they're important, okay? And then some best practices for you to run your businesses from that money management perspective. Laws of profitability. So here's one. It's not actually in the laws of profitability, but I want you to know this. Business ownership is different than personal financial stuff, okay? With personal finances, you know how much money you have coming in. And so if you have to manage your money, it's typically done with budgeting and cost cutting. But that's not true for business owners, because no amount of budgeting and no amount of cost cutting will ever make up for not making enough money. Almost all the problems that you might find with your cash flow is going to be because you are not making enough money. Money management is the gateway to abundance and will transform your business and your life in ways you cannot yet imagine. So I really want to inspire you to take this on. Okay, here they are. This one's kind of like, duh, make more than you spend. That's money management. Make more than you spend. Great. Okay, we know that rule. Value, value, value. I discovered that a lot of people speak only about what their product is, okay? That's actually the second value piece. What is my product? What is it? What is the solution that people are looking for? But the first value, the number one value, is you. You bring your unique experience, skills, passions to everything that you do. You are that number one value for your business and those that you serve. Value 2, again, is what your product is. And then the third value is, what do your customers get from using it? What are their benefits from using your service or good? Because basically everybody wants to know what's in it for me. Be action-based, okay? Always take action, clarity, action, move on. Be results-driven, measure for results. Pay attention to the results you're getting, because if the results are not what you were after, then you need to change your strategy and your methods. Know your numbers. This is huge, folks. I know a lot of people think that, bookkeeping and accounting is math. It's not. The software does all that heavy lifting for you. Okay. The thing is that you have to pay attention to your numbers, and you need to know what they're telling you. And that's what we're covering today. Knowing your numbers, knowing where to look, knowing what they're telling you, and then you know what to fix, because it's not about working harder. It's about targeting things that need to be changed. Establish goals. That is one of the ways that I tripled my income my second year in business, by setting new targets. I didn't realize how powerful that was. I had heard it, and I was really good at hitting targets and goal setting. I just didn't realize how important it was just having a financial daily target. Okay. Have a plan. That's a strategy. Okay. Manage your time. Everybody is after you to do something. Do things that are revenue relevant for you and your business. Okay. Get rid of the fluff. Do what's essential. Have a plan. Okay. Manage your time. And then love what you do. We have found that people who love and care about what they do love their businesses more. They're more profitable. They don't mind the longer hours that maybe they would have as an employee. Some employees work 40 hours. A lot of business owners work 60 hours because they're running the business. So love what you do, because then you never work a day in your life. Okay, let's talk about the terminology. Some of this we covered on Tuesday. Actually, I think all of this we covered on Tuesday. Just want to get you up to speed for any of you who did not attend Tuesday's presentation. Bookkeeping tracks the transactional detail of business and must be accurate for it to be useful. Okay, bookkeeping is just taking the numbers and putting them in the right place. Okay, was it income? Was it a cost of goods? Was it, transfer from an owner to your bank account? Okay, what are these numbers? Where do they belong? And we're going to cover that. Okay, so bookkeeping is the transactional detail of the business. Okay, accounting, that's the big picture view. That's really what we're working on today. Reading financial reports, looking at what the numbers are telling us. So accounting is the CFO part, the chief financial officer piece of every business. No matter how small or how big, there is a chief financial officer, and you are that person. Your transactions will show you what is really happening, where your money is coming from, which customers are really buying what you're selling. Okay, and where it's going to. What are your expenses? Pay attention to that, so that you can make informed decisions about what steps to take and when to take them. I know a lot of business owners go, I don't know whether I should or shouldn't. Okay, your numbers will help guide you with that. And then trust your gut. Okay, bottom line is, folks, with bookkeeping, garbage in gives you garbage out. Get your bookkeeping nailed. Start reading your reports, develop your money management skills, and you're going to figure out how to have a successful business. So accrual versus cash basis, this comes up as a question all the time. Most businesses run on a cash basis. Money in actually in the bank account, money out actually out of the bank account. Okay. Most businesses, 99.9 of them, are taxed under a cash basis. So what happens is that a lot of businesses think that they only need to pay attention to cash basis accounting, okay, which tracks the transactional detail by the amounts actually paid and actually received, okay? But accrual basis is what a business owner wants to really understand and to know. And what accrual basis accounting is, it tracks the transactional detail by the amounts paid and amounts due to you, which is accounts receivable, and the amounts due to others. Okay, so it tracks a lot more, and it allows you to say, how much money did I actually, how many sales did I make this month? If I'm personally, if I'm an invoiced kind of business where I do my invoicing, how many did I actually sell? How much can I predict will I receive next month or shortly? Same thing with what I owe. Maybe I didn't have the cash on hand to pay all of my bills, so they're sitting in accounts payable. Now I know how much I owe. And we're going to cover that when we start really looking at those financial reports. So accrual basis and cash basis accounting. So more accounting terms. Revenue, sales, income, all the same beastie. They're all the same animal. Okay. A lot of words are used interchangeably, but they can create confusion. So get in your head that income is the same as revenue, is the same as sales. Now, sales might be the number of sales that you made, but it also might be the dollars of sales that you made. So you may refer to these words differently as they relate to you. I just want you to start understanding that when you're talking about these things, you want to use words that have meaning to you and to the others that you're speaking to, people on your team, for example. Gross profit. Now, if you don't have costs of goods, then your gross profit is going to be the same as your total revenue. Okay. But if you have costs of goods, and these are expenses or costs that are directly tied to your revenue. Okay. So your costs of goods are things that, like if you have inventory, one of my favorite examples is the merchant fees. So more and more customers are using debit cards and credit cards, and you only incur merchant service fees when you make a sale. So that is a really great example of costs of goods sold. So gross profit is income less cost of goods sold. Net profit, net income, again, perfectly interchangeable words. It's whatever's left after the expenses are subtracted from your gross profit. That's your net profit. And we're going to see why that number is important. Profit margin. This one, not every business uses or understands, but basically it's a percentage of the revenue, and it can be based on a gross profit or it can be based on a net profit. What this allows you to do is look at your pricing to help you say, am I priced adequately for what my overhead is, which would be my ordinary expenses and my costs of goods. So that's what this number is. There's lots of information available to you online on what the formulas are to figure these things out. Okay, they're not particularly complex. They're more of a step by step. This number, this number, this number. But you need to know the term of what number they're looking for in order to figure out your gross profit margin. Owner's equity. Now, the equity part of a business, okay, is basically the difference between the assets, what you own, and the liability, what you owe, and then you have the total equity. However, there's another important piece called owner's equity. That's you. That's the money from your business that you put into your business, that you put into your business, and the money that you take out of your business. One of the things, as I mentioned the other day, is that a lot of today's software does not add an owner's contribution account line. And so what happens is business owners go to put money into their business and then they don't know where it goes. An owner's contribution, money that you take out of your pocket and put into your business, is not income. Okay, it is not income. And the money that you take out of your business, that you take directly out of the bank account, is an owner's draw. Okay, and then we have retained earnings. Of all of these concepts and terms, this is probably the least important for most businesses. Because it measures the total losses and gains over the life of your business. It should ultimately be a positive number. It shouldn't be a negative number. That means you're losing more consistently every single month. But most businesses don't look at this regularly, but you can use it as part of an annual analysis of your business. So it doesn't have a lot of impact overall when looking at the financial statements. I just want you to understand what the term is: total losses and gains over the life of your business. And this is what a chart of accounts looks like. Okay, we covered this a little bit more on Tuesday. So we have the balance sheet side, which covers the life and current state of your business, assets, liabilities, and owner's equity. And you see some accounts underneath that. And then we have the profit and loss side, which most business owners understand pretty well. And so you have your revenue, income, less your cost of goods. You'll see some of those accounts there. And then your expenses. And we're not going to go heavily into this today because we covered it on Tuesday. So we're really going to get into how to read financial reports. But this helps to get you up to speed and help refresh what you may have been, what you learned on Tuesday. Okay, here we go. Now we're going to get into financial state reports and how to read them. These take practice, okay? What happens with financial reports is that you start seeing patterns. So it's partly about the numbers themselves, but basically $50 and $500 is only just an extra zero. All right, so you don't have to get too upset because you don't understand the numbers specifically. What you want to pay attention to is, are you seeing patterns? What is the relationship to the numbers to other numbers? And that's what we're going to cover, right? So again, here's the chart of accounts. These are the 6 building blocks of money. These terms you must understand and get cold. Assets, liabilities, equity, which live on the balance sheet, and the income, cost of goods sold, and expenses, which live on the profit and loss side of your business. So a refresher: assets, something belonging to you, cash, inventory, furniture, equipment, etc. Liabilities, something you owe, debt, bills, loans, credit cards. Equity, the difference between the two, the difference between what you own and what you owe. Probably the least understood part of the balance sheet. Most people get assets and liabilities. They really struggle with equity. And I'm hoping that after today, you will have a little better understanding of what the equity is and its relevance and importance for you with running your business. Okay. Again, most of you know these: income, what you get paid for what you do. Remember what I talked about with owner's equity when you add money from your own pocket, okay, or a loan that you get and you put that money into your business. That is not income. Income is only what you get paid for what you do. Even refunds are not income, okay? If you get a refund for a utility bill, that just reduces the expenses. That goes right back to the expense account, okay? It is not income. And I make a point of this because of the number of business owners I have worked with that have been taxed on money that was never part of their income because a bookkeeper put it in as income. And I did have a client pay $30,000 in taxes on something that should never have been taxed. It was a loan from a family member. And it wasn't discovered for 5 years. And by then it was too late to fix. Okay, so I just want you to know income is only what you get paid for what you do. Costs of goods are those costs and expenses that are directly tied to your income. The IRS doesn't have a lot of concern about what you put here. This is for you as the business owner so that you can figure out your pricing and run your business by the numbers. It's useful for you to figure out what's really tied to your income so that you can make informed decisions. I see a quick question from Edith. Thank you. What about grants? Do they count as income? It depends. Depends on where it came from and which agency you're filing your taxes with. So maybe a grant from California doesn't get taxed in California, but the IRS, the federal government, may tax it. So I always have that set aside as other income as a category in my books And I address that question specifically with my tax professional. So thank you for that question, Edith. Expenses. Expenses. It's what it costs you to run your business, whether you make money or not. Your utilities, your rent, most of your payroll, okay? Internet, social marketing, advertising, any of those things. What it costs you to run your business, whether you make money or not. Costs of goods is what expenses and costs you might have that are directly tied to your income. And again, this is usable to you when you start looking at profit margins. Again, these are further advanced conversations, but you will get there. I can guarantee it, because this is like learning to ride a bike. You start learning what all the features are. Let's say maybe more like a motorcycle. Bookkeeping might be more like riding a bike, but reading financial reports is really maybe more like riding a motorcycle. You got to know what all the bells and whistles are, and the gears and the brakes, and where everything is at. And so you will get there. A little bit of practice, you will get there. So let's take a look at an accrual basis profit and loss report. What does this report tell me as compared to maybe a cash basis? Okay, so let's first look at accrual basis. Remember, this is tracking all the money that you have received, all the money that is owed to you, okay, all of the bills that you have that you owe, whether you've paid them or not. Okay, that's what's on this accrual basis reporting. Okay, here we go. First thing that people always ask me, well, what's taxable? Well, I'll tell you right now that the net profit on an accrual basis report is not a taxable number. Okay, so we pretty much don't worry about it. The thing is that typically only C corporations, very, very large corporations, are taxed on an accrual basis. Everybody else, 99.9% of other businesses, are all taxed on a cash basis. So we don't get anxious about the net profit on an accrual basis. It just really tells us whether we're running profitable based on all of the things that we owe and all of our earnings. Okay, are we running a profitable business? Okay, so that's accrual basis. Really, what do we want to pay attention to? Okay, so we see our income. We have repair services and we have equipment sales. Then that's our total sales. And then we have our cost of goods sold. Now, I use $36,000 for equipment sales, okay, so that you can see that I'm selling equipment. The cost of goods is the inventory that I have that I sold. So it's what I paid for those things that I sold. Most businesses do a complete double, okay, 100% markup of what they're selling, of their inventory. So in this case, it's $18,000. So it cost me $18,000 for $36,000 that I made. So I sold my inventory, I paid $18,000 for it, and I made $36,000. My gross profit is $42,000. These financial reports are just based on numbers that were created that are a little bit more user friendly, because they don't have so many extra zeros and they don't have a whole lot of extra little numbers in there that people just go, I can't read this, it's just too much information. You just pause. It's kind of like if you're not familiar with going into Ross or Marshall's, okay, it's like it's completely alien to you. You don't know how to find anything. If you're not familiar with going into Home Depot, same situation. Yeah, you don't know how to find anything. When you're looking at your financial reports, what you're going to do is you're going to pause and you're going to say, what does this number tell me? How is this number related to other numbers? And then you're going to practice it until pretty soon you know your business, because you know your numbers. They're going to start making sense. How does this relate to last month? Okay, how does this relate to last year? How am I doing financially? Am I growing? Am I losing money? Do I need to be more profitable? You're going to look at all of these things, and the accrual basis report is perfect for doing that. Okay, so we just want to look at these numbers and see what they're telling us accrual basis. However, most people run their businesses by cash on hand. So they love also looking at a cash basis report. And I think that that's really important. What does my cash basis report tell me? So what I've done here is I have put under I have highlighted the little places where the report changes specifically. Okay, so the first thing is in equipment sales, I have not been paid yet for all of the sales that I have made. I have invoices that are not paid that are sitting in accounts receivable. I have $3,000 sitting in accounts receivable that I have not received yet. So my total sales cash is $57,000. Now, point here, the cost of goods didn't change. Okay, I've already had to pay for those. So that number is unchanged, but it does affect my gross profit. My gross profit is now less because I have received less in the form of cash, of payments received. Okay. So then let's look at how that impacts the expenses. Well, I just selected one. So I said I paid only part of the insurance bill due, or maybe none of it. I don't remember now which I looked at. But the thing is I didn't pay all of that. All right, so that number is less. So my total expenses under cash basis is also less. So my net profit, you will see, is also less. So this is how this impacts these numbers. And when you're looking at your reports, you do want to kind of say, I'm looking at an accrual report. This is telling me about my invoicing, what I've actually billed, the sales that I've actually made, and all the expenses that I actually have. Am I being profitable? On the cash basis, you're looking to see how much cash do I have? What do I have on hand? And then what is my particular tax burden right now? How do I know? Because the net profit for a business is profitable. It does vary whether you're a sole proprietorship or an S corporation. Okay, we're going to only touch upon that briefly here in just a moment. It does vary there. So you have to know what kind of entity that you are, and we're going to cover that. But generally speaking, this number is always taxable, and it has different kinds of tax implications depending on your legal structure. Again, sole proprietorship, an LLC taxed as an S corporation, or an LLC as a single member, or an LLC that's a partnership. I mean, there's so many variables here, and you will learn those. You have to let your tax professional give you some guidance and start asking good questions until you understand your business. Okay, you don't have to understand everybody else's business. You just have to understand yours. So this number is taxable. Another thing I want to point out before we move on is that the wages part here, if you're a sole proprietor or a single member LLC, only applies to your employees. Business owners who are single member LLCs or sole proprietors may not be paid through payroll feature. They cannot receive a paycheck. Everything comes out of their business by way of owner's draw. Your owner's draw is not taxable. Okay, what is taxable? Your net profit. Okay, this is stuff you're going to need to learn, and learn well, and keep asking these questions until you really understand it, so that when you look at your reports, you know what the number is telling you. Okay, you know what the number is telling you. So, but on the other hand, if you're an LLC taxed as an S corporation or an S corporation, okay, which is what most businesses are, in the small business world, they're S-type corporations, which means they're taxed differently. Okay, then this money, then the wages could include your wages. I always encourage business owners that have a payroll check to actually have not just wages, which would be regular employee wages. They should also have one called officer's salary. So you see it's two different numbers there that you can measure what you're getting paid for from your business. So I hope that wasn't too much. Okay, it's just a beginning. So where do we look? What do we care about? What kind of report are we looking at? What is it that we need to know? And remember, you're just saying, what do I need to know? Total sales, cash in, cost of goods, and total expenses that I'm paying, and what my net profit is. So I promised to tell you a little bit about the difference between a sole proprietorship and a corporation. So people always ask me, well, when should I know, how do I know when to become incorporated? I will tell you right now that you never become incorporated because your brother-in-law thought it was a good idea. Okay, never. Okay. Always measure it on the considerations about what is a good time for you. So there are a few. You might become incorporated for liability protection. You might become incorporated because you're going to need investors. You might become incorporated because you want to look like a bigger business. So, credibility is a really big one. And then there are also the tax considerations. Okay. In tax considerations, this is what we're going to talk about right now. So when your business gets to be a certain size where your net profit gets to be to a certain level, and that level is when you start getting close to 100,000. If it's just a tax consideration, you're starting to get close to that 100,000. A tax professional can guide you, and you know that you're going to exceed that number next year. Then it's probably a really good time to be talking about, do I become incorporated now? Because what are my tax benefits? So please note that the total income doesn't change at all, whether you're incorporated or sole proprietorship or single member LLC. The total income doesn't change. You'll notice also that the cost of goods doesn't change. The gross profit doesn't change. That's not the measuring stick. The measuring stick, you'll see that, expenses, they don't really change either. The measuring stick is right there at the officer's payroll, which I took out of the net ordinary income so that you could see it as a separate item. All right. Normally it's just up under regular payroll, but I just put it down here at the bottom so you could see it. All right. You will see that as a sole proprietor, okay, your taxable base is $54,000. Okay. That tax is going to be a lot bigger by about 7%. All right. Because that is going to help self-employment tax on it, which is 15% round that. Okay. So you're going to pay taxes on all of that money. Okay. Now, why is it important for a corporation? Well, because in a corporation, you get to take your payment as the owner out of your business by way of payroll. And that's going to save you 7% in taxes right off the top. However, corporations have to have separate tax returns, which costs money. Okay. There are other operating things that you need to do and other fees and taxes and such that you will pay for a corporation that a sole proprietor doesn't have to do. And corporations are more complex to run, a little tiny bit, by the way. However, if you don't run books and you don't take care of the numbers and you don't take care of the financials, there's probably no point in becoming a corporation. Because if you've got it for liability protection, it won't hold up under scrutiny. So you've got to run your books, you've got to pay those extra fees. So there are bigger expenses. However, the taxable amount drops significantly, and the tax savings can be huge overall. Okay. I see a question that's relevant to this slide. So Linnea says, what are the differences between S corporation and LLC outside of taxation? What would be the advantages and disadvantages of a different corporation? That's a complex question. So here's the thing. If it's not just taxes, it's going to be credibility, liability protection, name protection, and getting investors. And those are all separate considerations, and those are the other differences. Sole proprietors, they don't have much in the way of liability protection, okay? Depending on your name, you may not have the credibility. Sole proprietor can only be protected within the county in which it's registered, and a corporation is protected at the state level and in any other state that it's registered. So those are kind of the biggest differences, and it's some more complex answers. I don't have time to answer it fully here, but those are the basics to know. Thank you for the question. Okay, now let's talk about the balance sheet. One of the things about the balance sheet is that it's regularly overlooked and dismissed by both CPAs and business owners because they never understood the value of the balance sheet. So I'm going to show you why you want to know what the numbers are telling you on the balance sheet and where to look and why. So here we go. First of all, how much cash do I have on hand? Your books have to be accurate or this number is just useless. Okay, so you reconcile your accounts, take care of your accounts. Okay, accounts receivable. How much money do I have sitting outside owned by that other people have that they owe me? I don't let this number get any older than 90 days because after 90 days, there's a real chance they're not going to pay me. I follow up within 45 days of the bill. I give them 30 days. If they don't pay, unless it's due on receipt or due in 15 days, and then I follow up within 15 days after the due date. I don't wait. I get on them. Okay, I'm nice, but the thing is I ask for my money. I earned it. I worked for it. I provided the goods and services. They are supposed to pay me. So don't let this get too old. Pay attention to it. Get your customers used to paying you on time. It's really easy. So then how much do I owe to others? Now, in this particular example, I actually have enough money in my bank to pay what I owe. But when those numbers or the amount in my bank is less than what I owe, I have a problem. And your accounts payable can include your credit card obligation. This is where you look, and this is why you look here. What do I owe to others? Do I have enough cash? Do I have enough cash on hand to run my business for 2 weeks, 30 days? 6 weeks is better. Inventory. If you remember on our profit and loss, we had $18,000 in inventory. If that's my monthly number, if I'm selling $18,000 in inventory every month, I don't have enough inventory on hand. If I know that it takes me 6 weeks to get inventory, I'm already behind the ball here on this. I'm not going to have enough inventory to sell. That could really hurt my business. Really hurt my business. Your inventory number is something you go, oh, I need to be on top of that. Do I have enough inventory on hand? In my example, you don't. So you have to get after it. And then if I have to buy $18,000 in inventory, do I have enough cash on hand to do that? In this particular example, I do. But if I only have $5,000 and I need $18,000, then I have to figure out, I've got some problem solving to do. And then the last piece, I just want to show you again the owner's draw. And also below that, see where it says net income, that's also called retained earnings. Okay. So different software calls it different things. Different business models call it differently. They're still the same thing. Your owner's draw. So this $5,000 that people take out of their businesses is not taxable. I get asked this over and over and over until the concept sticks. The money you take out of your business by way of owner's draw is not a taxable number. I'm going to ask the question and then I'm going to answer it for you. What is the taxable number based on a cash basis profit and loss return? What is the taxable number? It's the net income. Okay, cash flow management. What do we need to know about cash flow management? I'm going to cover this briefly. It is in next month's presentations, but we're going to talk about a little bit here. So if this is my cash on hand, okay, and I have my total sales and my gross profit. So my gross profit is the total cash available that I have for next month or next year or whatever measure of time I'm using. Total cash available is gross profit. Expenses. These are the total expenses that I owe. I'm saying that I monthly owe $18,000, nearly $19,000. That's what it takes to run my business. Okay, then what? Well, this is the piece that comes from the balance sheet that a lot of people don't understand or use appropriately. Okay, and this is you're paying for things that are all coming out of your balance sheet: inventory, notes and loans, credit card payments, owner's draws and distributions. All of these are cash flow conversations. They don't show up on your profit and loss. The only place that that money is available from is from your gross profit after you've paid all your expenses. And then you'll see in this example that I'm not going to have enough cash. I don't have enough cash on hand based on what my profitability is, what my revenue is. How do I fix that? Make more money, make more sales, focus on revenue relevant activities. That's how we drive success. So I have a question for you. Why are you in business? If you're not interested in being financially successful, why are you in business? So what do? We pay attention to our sales. We pay attention to our sales. The money management part of your business does not eat up a ton of time. It eats up only a little bit of time, but it's absolutely essential that you do it. So the thing is that once you know that you can pay attention to running your business. Yes, running and managing your business is very, very important. Your employees, your sales, your marketing, all of these things are really important. But pay attention to your sales. It shifts the way you function. It shifts the way what your habits are. And that is how I tripled my income my second year in business, was paying attention to my sales. Why do we want to do money management? Well, it'll help you make money, maximize profits, control expenses, help you keep more of what you make. Hey, I hope I inspire you here. Protect your business from theft and costly mistakes. Money gone is gone. Provide reliable data for making informed decisions. It's all about running your business. It helps you to create financial predictability. You're going to be looking at your accrual basis report compared to your cash basis report. How much money can I predict will be coming in? Okay. It helps you to budget and manage cash flow. It allows you to plan and measure for results. It'll make tax season easier and less stressful and help you reduce liabilities. It'll save you time. It'll create peace of mind. Best practices. We're going to go through these very quickly. Start thinking of what questions you might like to ask. We're going to have a little bit of time. Here we go. Use accounting software. Set up a money management protocol and stick with it. Means what days of the week and month will you look at your money? Okay. If you get behind on your bookkeeping, get caught up. Review and reconcile your bank payment services and credit card statements every month. People, don't let this get behind, because if you don't, the information on your balance sheet, your cash on hand, et cetera, will be inaccurate and you will not be able to make informed decisions. Minimize commingling of funds. Okay, this really comes kind of from Tuesday, is that don't commingle your expenses and things that you use your business account for. Keep that really minimized. Okay, the IRS is not a happy camper if you start commingling a lot of money. They might start disallowing things. Learn bookkeeping basics for yourself. As the CFO, you need to know if the information is accurate, okay, and what's going on with your money inside your business. And the only way to look at it is to be able to know what's going on with the bookkeeping transactions, okay? If your bookkeeping is more than you can do or will do, get help. You're the CFO and solely responsible for the accuracy of your books and financial health of your business. I do have people that said, well, I told the IRS that I didn't know what was going on, that it was the bookkeeper's fault. IRS doesn't care. If you have an in-house or third-party bookkeeper, be sure you receive timely reports and spend 20 minutes a month at least reviewing them. Be sure that you're, even with an in-house or third-party bookkeeper, be sure to look at your accounting software for compliance every few months. Are the accounts being reconciled? Do the numbers make sense? You can see it on your balance sheet and such, but you do want to be sure that it's actually in the transactions. And that's easy to do. And again, that's not something that takes a lot of time. So you should, every few months, you should look at that. Make sure that you have on calendar getting your reports, because I know that you get busy and you think, oh, I'll do it later, and then it'll just slip your mind. No, make sure that it's a part of your regimen that you actually do that. Okay. If you're a small business or startup, monthly bookkeeping should be enough. Okay. If you're a more established business or struggling with cash flow, do your bookkeeping weekly. Focus on revenue relevant activities every single day. It makes a difference. You start understanding your numbers, you understand how to drive your business. So wait, we're not quite done yet. We've got a few more seconds here. In January, we're going to do budgeting and cash flow management made easy. Okay, so it doesn't, not stressful or complicated. Okay, and then we're going to do forecasting and planning for growth, and that's going to be on January 13th and 15th. And Veronica said that she would get you that schedule. So be sure to get those on your calendars so that you can attend. So in closing, I just want to say that money management is the gateway to abundance. It really is. And savvy entrepreneurs use this skill to make financial freedom a predictable and achievable outcome. According to Intuit, these are the makers of QuickBooks, over 80% of entrepreneurs manage their business finances on their own. They should. They should always. Okay, they should always do this. Okay, but the SBA, the Small Business Administration, the federal government, says that 60% of all businesses fail not because owners lack passion or good ideas, but because they lack the expertise to effectively manage their resources, their time, and their money. But something else is still missing, and this is just kind of a gift for you that I'm giving you. Traditional business education typically ignores a simple truth. Systems, structures, and skills alone are not enough to get us across the finish line to financial success. In fact, they account for only 50% of the success equation. It's our belief systems that run everything. And business owners must also learn how to embrace the positive, empowering beliefs that support making and having money. Thus, I give to you the 11th law of profitability. The possibilities for achieving a life of joy, purpose, and financial success are limitless. Once you embrace that, it will change everything. You will start really loving your business. So on the slide deck that you will receive, there is a link to this book. Maybe while I'm answering questions, I can go ahead and grab the link and I can drop it in the chat box if you would like, but it is going to be available to you, and it'll once you order it, then should come right straight to your email. Okay. So yes, Danielle, there are simple software options that I would recommend. You can certainly I do have an ebook on that's available. My email is in here. If you'll just give me an email, I'll send you a link to that. I do have a lot of them. The shorthand version is QuickBooks is probably the most powerful. You're going to, it's on the more expensive side, depending on where you're at with your business. Wave can be very good. Xero is good. I just really encourage you to determine what your needs are and make sure that whatever you select allows you to grow your business. Don't get something too small. Buying the cheapest one on the block doesn't serve you. You need something that supports your business. Okay, so Paula, let me, I think I can grab your email. I am not able to grab the, usually the chat. So folks, just please reach out to me directly if there's something that you would like me to send you. Let me just put here, it's, There's my email, but it's on all my slides. So I'm really easy to find. You type in my name, I'm pretty much everywhere. I'm LinkedIn, Yelp, Facebook, you can find me. So take the initiative on that. So yeah, so okay, there's that. So any other questions specifically about the today's content, so that I can give you some, if there's some questions that you'd like to have answered. Well, this is great. It means that I really gave you good information, which this is really important to me, that you get this information in a usable way. Okay, so here's the link to the ebook. And there is and then the code is right here on the screen, but the code is ebook 10. And then if you want to get the one on the different kind of bookkeeping software, be sure to just send me an email. I'd be happy to send that over to you. I'll send you the link where you can just download it. It's also a free option. Okay. And anyway, so thank you. Thank you, Caitlin. I really love what I do. I have been doing this for over 15 years. Absolutely love sharing these financial concepts with business owners, because I have seen what the results are when people embrace these things. Don't get stuck in, this is too hard, I don't know how to do it, that sort of thing. It's really just clarity. What do I need to attend to? Focus on it, okay, and then get into action. And it always, always makes a difference. And money management is going to be that piece that is going to take you from struggle and financial concerns and worrying about cash flow to really being able to pay attention to your business and live an abundant life, however you define that, whatever that looks like. More time, more money, whatever that looks like, today, tomorrow, whenever. It's just all going to land in the money management space. So thank you. I see a couple more messages. Any questions?
No.
Ed, yes, QuickBooks does accrual basis and cash flow basis, cash accounting, absolutely top drawer. Okay, that's one of the problems with some of the other software. They don't do that. That being able to run your business from accrual basis and cash basis is spectacular. It has amazing results. So thank you for that question. Yes, QuickBooks does an extraordinary job. QuickBooks Online, back and forth, however you want to see it. Just click the box, accrual basis, bam. Cash basis, click the box, bam, you've got the report. But the other softwares, not necessarily. Okay. Thank you, Brenda.
Okay.
Mhm.
So Lorna, thank you for that presentation. I saw a lot of emoji cons, just
Yes, me too.
very
Thank you.
pleased with today's presentation. I know there's one question left. Something, how much time does it take to learn the 101, the path to financial freedom, in a class or a book? I'm not sure.
So that one, if you're not sure what, if you're grabbing the entrepreneur's path, it's a very, very short ebook. Okay. Money mastery takes consistent, persistent effort, but you're going to learn it step by step. When you were 5 and first learning to read, you were only with simple little books. Guess what? By the time you were in high school, okay, you are reading a lot better and a lot more things. So the money management works exactly the same way. If you're going to start with basics and fundamentals, which what today's pieces are, you're going to practice them until you get really, really good at it. So learning is a lifetime experience. So depends on how much time you want to put into it. So the pieces, the concepts, is what I teach. What are the concepts? Let's start there. And then let's build, strengthen that muscle until you really get good at it. It makes a difference.
Yeah, this four-part series is about that. It's mastering the fundamentals or the structure.
Mhm.
That's why we introduced this. But I also want to plug in that Larna will be with us also to provide a QuickBooks training. So just keep that in mind and you'll receive information about that. I know we have one more question, but we're past time. I don't know if Larna, if you're okay with answering. So
I am.
okay, so someone said, so being with the CPA is suggested on a monthly basis.
So if you're asking meeting with your CPA on a monthly basis, no, that's unaffordable for most businesses. Okay. Learn these skills. They will serve you all your life. Okay. So
Mhm.
learn these skills that are here, practice them, ask specific questions. When you see your tax person or CPA, they can answer and will answer a specific question, but they typically are not all that interested in doing the day to day stuff for business owners. You are responsible for this. You can learn these things. So you look at your financial statements monthly, but you don't need a CPA to help you. One of the things that I do, and I am a fee-based consultant, so I'm not part of the PACE organization. I meet monthly with my clients for a financial review, and they're very excited to do that because we look to see what's going on with their business. It holds them accountable, and then I can answer their questions and provides additional support and training. And the thing is that you can certainly start with the PACE counselors to get additional training on these things. All right. But monthly, yes. Look at your stuff monthly, but you do not need a CPA to do that with.
I just want to add something from my own personal experience. So, working with business owners, I have found that sometimes they come to us because they were not paying attention to the financials. Some examples have been their taxes have been prepared wrong, but had they understood what was on the taxes and how they were supposed to report, that would have been avoidable. Some people also they counted on someone else to help them report the sales tax on their business, and once that person didn't do it, they assumed that that person was doing it. So we've seen a lot of scenarios like that, and it comes down to exactly what Larna was saying is making sure that you're keeping track of your financials. If this is new to you, I would really encourage you to watch the recording. If you need to watch it three, four times so you can master it, I would really encourage you to do that. You are a for-profit business, so for-profit means that you're watching the profit, and part of that is keeping, a pulse on how your finances are doing, because your ultimate goal as a for-profit business is to make profit and to know, the ins and outs, so the money coming in and the money coming out. So this is fundamental to being a small business owner. So I can't even stress enough how the wealth of information that Larna is sharing with you. Yeah, so we will encourage you to come back the second week of January. The next class will be Tuesday, January the 13th. And yeah, we welcome and thank you everyone for being here with us today. And thank you to our speaker. And we will see you in the new year. Thank you, everyone.
Thank you. Okay. Bye bye.